Forex Trading Unlocked, and we are here on April the 6th, 2020 with a Forex market analysis and live trading breakdown for you. And we just want to pull up our disclaimer real quick to remind you that this webinar is for illustrative and educational purposes only. And with that, we're going to go to our forex-trading-unlocked.com website. As far as numbers coming up this week, we still have the Bank of England rate decision tomorrow, as well as we have the unemployment claims in the U.S., which no one is not expecting them to be high, I would think. And then we have also unemployment on Friday. So that's another number that we expect to be very high, and we just have to get through it, see what it is, see how the markets react. Right now, we are seeing consolidation, even in the currency markets, especially the major currency crosses. So we have the dollar index chart pulled up. And Monday, we had a nice buy signal with follow through yesterday, and today we have a little bit more. The only thing is that this is keeping the dollar index just chopping around inside a nice range. And let's see how it is faring for the currencies versus the dollar. So we know the dollar index as a whole is strong versus the broad-based currencies. And as you can see, the euro US dollar is also trading lower once again today with negative follow-through. And this is now towards the bottom of our range. Something that you want to maybe key off of is the fact that where we have support here, where we're finding support right now, you can see that this has been a baseline pretty much for the euro, and even today's low is just bouncing on it. So below it, obviously the market is definitely bearish and still looking like it wants to go lower. Now the thing you have to think about is what has happened here. We are now trading and testing support, but we are coming off of a higher move high after a lower move low. So what does that mean? We're in a neutral bias right now. And that's the same thing with the dollar index. Like where it's rallied up to now is towards the middle to lower part of the resistance zone, keeping it at bay. So maybe there's a little more follow through going into the rest of today's session, maybe into tomorrow. But remember, we have the Bank of England rate decision, which it's not the U.S. dollar that it's totally affected, but I think depending on what they do, if they do have anything that can cause a shakeup with the pound versus the other European currencies, and especially with the dollar, then we have a chance at seeing a move occur. Either we're going to see an extension of bullish momentum for the dollar, or we may see the opposite. We also may see just a complete divergence from the euro and the Swiss versus how it's been trading for the past couple months, and especially past couple weeks. So with that being said, we're looking at support. We don't have any signals right now. This market, as you can see, is digesting the recent volatility. So let's look at the British pound. Oops, it's GBPUSD. So the pound US dollar, as you can see with this one, it's hitting support once again. Now the key thing about this is, unlike the euro that had made a higher move high after a lower move low, this market had been making higher move highs and higher move lows until recently, where it had made a lower move high. So the failure for the market to take that out also sets us up for a potential head and shoulders formation right here. So if you look at where support is resting today, it is right there. So the key thing here is to kind of think about it like this. If the dollar index, which has been a good gauge for trend, and now it's starting to settle into a sideways trade, that means we're going to most likely start to see divergence in currencies. So the question is which ones are going to spark a move, which ones aren't. It's possible that a pound move may be touched off after tomorrow's rate decision. Remember that Brexit did occur 3 months ago, and they are still now in the second phase of Brexit. The EU is having issues now with Germany that's complaining that the EU's bailout package for the union is going to put undue stress, and is something that Germany is not really happy about. They gave them an ultimatum of 60 days to prove that they will not cause inflation and some other things. How that's going to go down, well, that could keep the euro locked in a sideways trade, or it could actually have it under pressure. And that's where we might start to see some divergence, where you may see the euro starting to become a bear versus the Swiss and the pound and the dollar, where it's not just them trading in tandem with the dollar, or with or against the dollar. So now, if this head and shoulders formation is good, then we would see this neckline get penetrated with a close below it, and then also we need to have these last two swing lows taken out. This first one would have us a little bit bearish. If we take out the first one back here, that would have us confirming a head and shoulders formation and have us targeting a correction back towards this 120 to 118 area. But be very careful. This may be just an arranged trade, so it could easily stop and find support here in this lower area here, and then just bounce off of it and just start going sideways. So we don't know if the sideways trade is going to continue or if we're going to start to catch a move. Right now, we are having a lack of trend after such amazing volatility that we've experienced. The Swiss is showing a little bit more action on its chart, but even this isn't a consolidative move. This one, like the euro, had made a higher move high and a lower move low, setting it up for sideways. It is obviously having a little bit of follow-through with U.S. dollar strength, but then here again we have a situation where, just like the dollar index, we're kind of being contained. So since resistance seems to be pretty strong in this area, even if we poke above 98.04, expectations are not that we're going to hold that unless we have an amazing amount of dollar strength coming in, but there's nothing to really fundamentally or technically support that kind of a theory. Not that there's also, you're going to have very much bearish activity either, because the dollar just fundamentally and technically is that strong currently. So now let's look at the U.S. dollar and the Japanese yen. Let's go to the Asian trade zone and see what's going on there. So this market had been going sideways. It was one of the first ones that kind of set a consolidation. It had been riding support, and as you can see, it just once it took out the lows last week, it has now continued to make new lower move lows, and today, as we're speaking right now, it's making lower move lows. This is the one market that is strong versus the dollar. Unlike the other currencies right now that are showing weakness versus the dollar, you can see that in the midst of dollar correction or bullishness, whichever way you want to see it right now, the yen is not having anything to do with that. So now, very interesting with gold wedging, just like the interest rates have wedged and the dollar index is wedging. And wedging meaning that we're making consecutively lower move highs and higher move lows and gravitating towards a baseline. This currency isn't. This one's actually, the dollar is losing strength versus the yen. So very interesting situation that we'll have to see as how the Japanese markets react, because a strong yen is not good for the Nikkei, which is not good for the situation right now, especially for their exports right now. They would rather have a weaker yen than a stronger yen, in theory. So does that mean that they're going to do anything? Well, the BOJ, well, I doubt is going to be making any excessive or extreme moves in any direction. I think, if anything, they're going to stay pretty static, just because that's pretty much what they've been doing for a while. They've been through all this stuff years ago. So, and right now they are not going to damage their situations any more than it's already been done by what's obviously being reflective of the coronavirus for everybody. But otherwise, I think that in their minds right now, what's going on with this currency is that this is something they're going to probably try and work against, at least I would think in the short run. So we'll see what happens, but right now the bears are in control. This is the one market where we have dollar weakness. Now let's look at something else in this trade zone. So if this is dollar weakness, now we know that there's been dollar weakness versus the Australian dollar and the New Zealand dollar for quite some time. What started out as a upside correction has now been a trend for the past month and a half. But the question is it going to continue? Well, that's always a good question, right? But like now, if you look at what happened in the last few sessions, not much of a range trade, not much action at all. So Aussie strength here, not that there's dollar strength coming in, but Australian strength seems to be waning, which is very interesting because with China and with a whole bunch of other aspects of factories and trade coming back online, these certain things are very positive for Australia, but considering that there's a lot of flattening of the curve that still needs to be done yet, and we don't know how supply chains now may be restructured after this whole pandemic is, as it continues to unfold. So whereas China may have been supplying, you got to remember the U.S. consumer is one of the biggest consumers that China makes money off of, and if our factories start pulling out and if demand for Chinese products continues to wane in the United States, well, that would obviously have a negative impact on Australia as well. So right now we're seeing this market chop around. This kind of goes with the dollar index waiting for a move. We're going to see what happens with unemployment and stuff. So the dollar itself seems very neutral with the Australian dollar. I think that it's pretty much riding its own curve right now. So there's no signal here right now. We're going to have to wait and see what happens. So I mean, this market has been making higher move highs and lower and higher move lows, so that is indicative of what? A bullish trend. So be careful trying to sell into this market. We don't have any signals. Very interesting, talking about divergence. Let's look at the New Zealand dollar. Now we see how the yen is gaining strength versus the dollar. Australian dollar and the New Zealand dollar have been gaining strength versus the dollar since the middle of March. However, they've been pretty much sideways to only a little bit stronger over the past month. And now look at this. This market too is settling into a consolidation. Which is another word that you're hearing over and over today in this webinar. Consolidation, consolidation, consolidation. Well, not to use that term ad nauseum, but it is what it is, and this is something you have to focus on. We're looking for a breakout. We have to wait for the the Bank of England to meet tomorrow, and definitely the unemployment claims and the unemployment number on Friday is huge for the U.S. We know the whole world and the market has factored in the fact that it's going to be bad. The thing is that we just have to pass that date. Once we pass that date, then we look at something new. So it'll absorb that, and who knows, maybe the number won't be as high as people are planning on it being. So who knows? We won't know for another 2 days. But as we head into unemployment, you may start to see a lot of sideways trading, waiting for that number, and then be careful, because you may just have algo run up, spiking high and low. And look at a day like this. See this day where we made this higher move high, and then boom, we tanked down here and then came basically unchanged on the day. Look at that range. That range here, this is sick if you think about it. In one day, this is one spike of a day. A high of 64.52-ish with a low of 60.10. That is an amazing move in one day. Is that going to happen tomorrow or on Friday? Well, I don't think that is likely to happen. Anything can, but I think you will start to see, in order to get a breakout one way or another, you're probably going to see some volatility that is reflective of that. Not as extreme, but I could see us making a run for higher move highs, or even taking out this low here and setting a new trend lower for the New Zealand dollar, US dollar. But like I said, we don't have a signal. We have to wait for this news, because you don't want to force a trade. Right now, you might as well flip a coin. When the market's going sideways and literally going nowhere, it's not going up, it's not going down, so what kind of a position are you going to hold? Not in the outright futures or in the Forex cash. Options positions, perhaps. Selling, most likely. Now, the US dollar Mexican peso, this is one that's got a potential head and shoulders here, not to mention the fact that it just doesn't want to go up or down right now. It has been holding its own, and look at this, how it's just holding the trend here. Now, the funny thing is, here's a shoulder, here's a head, here's a shoulder. So as long as we stay below this last high right here, this market is bound to keep on testing this rising support line, because just by attrition, as it goes sideways, it's going to be trying to fall through this. And if we take it out, we have to make some take out some lows. Once we start doing that, it would confirm a head and shoulders, and then I think the correction has a good chance at getting back to this 22.5 pesos down to even 21.5 pesos. But that would mean that we have dollar weakness, and remember, when the U.S. catches a cold, Mexico catches the flu. No pun intended on the current situation. But the thing is that the curve in Mexico is still not flattening. It's rising. They're a little bit behind where the rest of the world is as far as on the outbreak, and that is definitely weighing on them. We'll see how this unfolds over the next couple of weeks, and whatever. Their cases are going up, which is the main thing, is to see it. As long as their death toll stays down at a small percentage, the odds are they'll just fare like everyone else is. But this is also weighing on Mexico because of their economy. No one's traveling. Mexico makes a lot of money off of tourism, and especially as we head into the spring and summer and fall, now we're actually halfway through spring, where they've already lost, over a month of revenue, and you're looking at probably not having resorts open up from at least having U.S. tourists being allowed to go down there for months to come yet, probably not even until the winter time. So that's a big deal. I mean, that means there's no college kids, there's no families, and there's no people taking holiday breaks. That means a lot of income will be lost in an area, especially along the coast, where they rely on tourism for their main income. So this market here, it's hard to see dollar weakness really coming in for a while. I'd use caution. This market's making lower move highs and higher move lows, wedging. We're looking for a breakout. Most likely it's to be to the upside, but these fundamentally, you would think that it's going to rally still if you're looking at the coronavirus, if that still has an impact on it. But this was a big run up from 18.5 pesos all the way up to 25, just short of 26. So that's a big deal. That was a high velocity move, and as far as it may have actually buffered and hit the ceiling already, and then that would mean that we're set for sideways to lower over the next couple weeks and a couple months. And then also we have, remember, this head and shoulders. So let's see what happens if we take out the downside or if we make a run for resistance. Now, I've used caution. Higher move highs, then our head and shoulders is off the table, and then you're looking at an upside breakout that could have this market up at 26.5 to 28 pesos actually. So speaking of the American trade zone, since we're on that, looking for dollar strength and dollar weakness. Dollar strength continues here. We had a buy signal in the US dollar Canada back here a couple sessions back, and we had follow through, and it looked like it was going to run out of gas over the past couple days, but today, as you can see, we're pressing resistance. Now, the interesting thing with this one is that we have made consecutively lower move highs and lower move lows. Then we have this fact that if you look at it on a month and a half basis, where are we actually? We're actually going pretty sideways. So this market has been pretty much contained, and I think that if we're correct in our scenario with the dollar index being range bound and the major currencies versus the dollar being range bound, well, then here's your parameters, which are actually pretty wide parameters. As far as dollar strength really coming into this market, I don't know how it has the ability to be too bullish versus the Canadian dollar right now in this situation. I wouldn't doubt that we have the potential to get above 142.63 here for a little bit, but then I think we have odds are more likely to be trading somewhere between this $1.3864 up to $1.4263. So that would mean that where we are right now, let's just figure we're going to go. We can come off this way, this way, this way, this way, whatever, but it's pretty much looking to, you get the idea, right? Stay contained within this area right here. Now, this doesn't mean that that's going to happen. We could have a breakout, but right now it doesn't seem like there's any real reason to think that unless there is a major reason for the dollar to become bullish, where we have another wave of coronavirus spiking in cases and deaths and what have you across the globe, which right now things seem to be, it's something we're going to live with. We know that it's going to be around for a while, and it's just a matter of how many cases a year and how many people. Hopefully it's something you can only catch once and then you have an immunity to it. We don't even know. There's so much about this virus that we do not know, and we'll see how things unfold. We know more now than we did 3 months ago, and we definitely will know more 3 months from now than we do now. So we don't know. Can't forecast that, but I think the major fundamental driver that has been the coronavirus in the markets for the past 3 months, it is still there, but now you're going to see how it's going to be more from the repercussions of it when you see how businesses do or don't come back online over the next few months, and how many businesses actually close. The more that shutter, the more that go out of business, the more lives that are in upheaval, obviously that will weigh on many other things as well. So, and hopefully inflation is something that's kept at bay. That's something what we brought up when it comes to the euro. It's going into the heads of the Germans versus the rest of the country, or the union, not the country. So, and here's something I want you to really take a look at. So we know that dollar strength, no matter what, is still here. Look at the Turkish lira. Now, this is what's going on in a lot of your lesser countries. The dollar is still a major bull. This is another reason for the dollar index to be somewhat based with a floor that even if the major currencies start to become bullish versus the dollar, the index itself is not going to fall as drastically as it would if all the currencies were falling or gaining strength versus the dollar. Because here's a market that you most likely are not going to see any major downside correction, meaning dollar weakness versus the lira, for, I would say, quite some time yet. Until they flatten out their curve and what have you, I think you're just going to have to ride this one, and we'll see where it goes. It's going to be very interesting. When it corrects, this market may come back on a extreme slide, because if you look at this trend, this trend has been, oops, we don't need that line. We don't need that line either. Let's get the cursor back here. Okay, there we go. See how this trend has been going? I mean, we're going back to the fall of last year, but here, look at this. We were at trading down here at below 5.80. Here we're at $5.80, and now here we're above 7 right now. This is a big deal. Dollar strength, obviously, as a whole versus the globe, it is still there. So now let's look at the euro US dollar once again. We started with this. This is a market that's definitely in question, where we might start to see divergence. Now, funny thing is, as we've been talking, now the market's coming back. It's rallying. Isn't it amazing how it's come off of support here? I'm not necessarily saying I'm bullish. I'm definitely not overly bearish, but it's really hard to see. As you can see, this market seems to find support here. And there you go. There's the line that's holding it up. And we'll see. I think that's, if you're an aggressive bull right now, you would use the low of today as your probably your risk level, or at least this last swing low for sure. Remember, higher move high, lower move low situation that has us in neutral. So we'll see how range traders might start to do all right for the next 2 sessions as we head into unemployment. But right before the unemployment number, remember this all the currencies could start to really flutter about, and I'd be careful if we have low volume and the machines kick on. It's going to be a bloodbath. So with crazy ranges and stuff. So be mindful of that. Use caution. Perhaps options spreads and binary options may be the way to trade the end of the week. So with that being said, since there really are no signals right now to follow and put a trade on and stuff like that, that's why we don't even pull up the platforms, because there's nothing on. So here's an idea. Why don't you check out the book High Probable Japanese Candlestick Patterns, which is available on Amazon.com in paperback and Kindle version. And with it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets, the Forex markets, the stock markets, futures markets, options markets, binary options markets, ETFs, you name it, you can use these signals in it. You just have to use the right methodology and know how to apply the right patterns. There's a lot of patterns that really don't matter, so you don't want to waste your time with those, that's for sure, or the time frames either. You have to be careful with that. And you know what? You can learn all about it if you read the book. So check that out. By the way, I want to thank you very much for your time. I'm Teddy Keckstedt from Forex Trading Unlocked, and we will see you